This is the Real Estate Investing 365 podcast, your go-to source for real estate investing strategies so you can start living the life you want and get where you want to go. With your host, Justin Hanna.
What's up, everybody? Welcome back. Another episode of Real Estate Investing 365. Today, I got with me Logan Freeman. He's a real estate investor, developer, and agent who found his niche in investment property, working with specifically buyers instead of sellers, where, you know, it seems like most people, a lot of times they want to work with sellers more, but there's always that niche out there. He's an ex-NFL player for the Raiders. He's in Kansas City. He's got a wife and a beautiful one little girl and then one on the way, right?
That's right. Got a little boy on the way.
All right. Little boy. Going to be a football player?
You better believe it.
Cool. Well, Logan, thanks for being here, man. I'm excited to get into it and find out where you come from, how you kind of transitioned from one career path into real estate, which seems totally different. So yeah, I want you to start by introducing yourself and then we'll go back and where you come from, how you got started.
Sure, man. Well, I'm excited to be here and hopefully drop some advice and maybe some learning lessons along the way that people might find to be valuable. So, You know, I grew up in Jefferson City, Missouri, which is the capital of Missouri, smaller town, about 2.5 hours east of Kansas City. And, you know, it's really a farming community, and there's a lot of farms and a lot of trucks. And you know, the biggest city I ever saw was when I would visit Kansas City. And I ventured this way right around college when I went to school at the University of Central Missouri. And I played football there, obviously, and I had the opportunity afterwards to be picked up as an undrafted free agent with the Oakland Raiders. And after that, was cut from the team there and decided to go back, finish my master's degree, and then I started in the workforce. And you know, I started doing real estate. And you know, I think that the interesting way that I got into real estate was through listening to podcasts, what we're doing here today, which is really exciting, and it's a new medium that I'm heavily involved with. But you know, back in the day, there wasn't that many podcasters, and I'm talking 7-8 years ago. Lewis Howes with the School of Greatness and John Lee Dumas with Entrepreneur on Fire, and those are the two guys that I would listen to on my way to an hour drive that I had to work when I was actually in school as well. And so that's kind of what turned me on to learning more about personal and professional development, but additionally learning how to make income outside of your W-2. And that's really what set me on the path of getting involved in real estate.
All right, cool. That's awesome. So were you able to make any money while you're in the NFL? Because, you know, I don't really know how that all works. Was it like you got your one year salary, or how was that? You don't have to go into details, but at least you made something, huh?
Yeah. So I was out there during rookie mini camp and a little bit afterwards. And so really you would sign 1 to 2 week contracts, and they were not big contracts whatsoever. So until you make that roster or you're drafted from the NFL and you have a signing bonus, you really don't make any money. And so it was very minimal. So I didn't really make too much money. I was trying to make the practice team and just kind of get that salary and be a blocking dummy for a couple years. And I knew I wanted to take that money and start a business. But, you know, I think that God had a different plan for me. And I still got into the business and met my wife and have been really successful and just really enjoying life now. So, I mean, unfortunately, I didn't make a whole bunch of money when I was playing football.
Yeah, no, I hear you. I have my niece, you know, it's totally different, but she was a professional soccer player.
Yeah.
After she was at Virginia Tech, like first team All-American, like has all the accolades from Virginia Tech as one of their star all-time soccer players. And she went to be a pro soccer player for a women's team in Boston. And she only played for 1 year because she's like, man, there's no money in it. You know, she got a job offer at Amazon and was like, she's out of here.
That.
You know?
See ya.
She was great. I mean, she was like an Olympic prospect and all that stuff, and she gave it all up just because she's like, no, it's not enough in it to just do it. So I hear you. Until you really make it, it's like probably a struggle. But no, that's cool. So how did you get the idea of going into real estate from listening to those podcasts, or did you kind of have like a background from your family or something that said, hey, like, why don't you go this avenue? Like, how did you get the idea to go that direction?
Yeah, that's a great question. And so we'll go back into the journey just a little bit, and I can kind of detail how I got started. And so, I was an offensive lineman when I was playing. So I weighed 335 pounds at the NFL Combine. And, I was a big guy. I'm still about 260, but at one time I had lost 100 pounds and I weighed about 219 pounds. And this is kind of when I got cut. And, the moment that I got cut, I kind of made a decision. I've had a couple surgeries and my heart really wasn't in it. And if I'm not committed, I wasn't sold on doing that long term. I couldn't really push myself the way that I needed to. The way that I got to the point that I was in college, being the captain, and any success that I had is because I was extremely internally driven and motivated. And unfortunately, I didn't have that when I got cut. And so I decided that day that, I was going to hang it up. And a few weeks later, the 49ers called. Their center went down with a torn ACL, and they needed a center. And they're like, hey, you're on our board. Our center went down, and this was deep into kind of hard knocks camp, right? Like where you see all the cuts. There was only one cut left, so it was a really good shot. But I had already made my decision, and in less than 5 or 6 weeks, I had lost over 40 pounds because it just took that much effort to keep my weight where it needed to be. And so when I went back to finish my master's program, it was a really big defining decision and moment for me. And I didn't have any money really, and I needed to pay for school because college football wasn't paying anymore. And so I got a job, man. I got a job driving an hour to basically a lead generation, company. I was just calling a list. I'd make over 250, 300 calls a day. And I did that for 6 months. I'd work from, I'd get up at 3:30 in the morning, work out, and I would drive an hour. So I'd get there between 7:30 and 8. I'd work from 8 to 5 and then drive back an hour to Warrensburg to school and go to school from 6 to 9. And then I spent 12 hours in the library on Saturdays catching up. And so what I learned through that whole process was discipline, was focus, was how to set a plan and go achieve it. The moment that I graduated was in December. My father, who has battled drugs and alcohol his whole life, came up to help me move out of my apartment. And, he's a 6'3", 250-pound strapping Native American, worked on farms his whole life, and he couldn't walk up the stairs. And I was like, man, something's not right. Well, we went back, we had Christmas and all that stuff. And at Christmas was the last time I saw my dad. And so my dad passed away very quickly from having a stroke and related to liver cirrhosis, which was brought on from alcohol and drugs and pain medications. And so, again, I had a pretty big decision kind of to make in my life. Like, do I want to go down that path? Do I want to go down? Which path do I want to go down? And thankfully, I dove back into my faith at that point, and I had some really good mentors to kind of help me along the way. And so I decided that I was going to make myself the best version that I absolutely could. And so that's when I started reading books. I mean, you see the books behind me now, reading scripture and really trying to figure out how can I become a man that is worthy of a future wife at the time and a businessman. And so I knew nothing other than I had a master's program, but they don't really give you much in college, to be honest with you, for what you need to succeed as an entrepreneur. And so those podcasts were enlightening for me. And through those podcasts, somebody mentioned Rich Dad, Poor Dad. I was like, what's that? And I picked that book up. After I picked that book up, I ran into Matt Theriault and a few other real estate podcasts. I started listening and I said, okay, well, I'm moving to Kansas City. I can either buy a house or I can move into an apartment, but I bought a fixer-upper and I moved into it. I had a roommate at the time paying my mortgage. I paid the utilities and I renovated the whole house. And less than 2 years, I put the house on the market and made my whole salary. And so I was like, man, that was really nice. And so I said, but there's got to be a better way because that you can only do that every 2 years and not pay capital gains tax and all that. And that's when I dove into rentals. And I found another mentor here in Kansas City, and we kind of stayed in touch. And I watched his business grow. And through a few jobs, I was always in sales. And through a few jobs, I was continuing to educate myself. And I finally decided to kind of get licensed. And my mentor's company was growing. He had a booming business at the time. And that's when I decided, I think there's some merit to this. And so I got my license because I needed to be able to get into places, look at properties and start learning that process. And the only way I know how to learn is by action and by doing. And so 3 years ago, I was fired from a six-figures sale job here in Kansas City. I was newly married. My wife had just started a brand new job, and I got let go from what I thought was a really safe and comfortable position. And, I was called in at 6 a.m. in the morning. And, Justin, I don't know if you've ever had the W-2 job or been through something like that. I'm sure there's people that can relate to this, but when you get called in at 6 in the morning, something is
Yeah.
going on. And so I brought a box with me, took my stuff because I knew it was happening. And they brought on a private equity firm and let off quite a few of the salespeople. It wasn't just me, but it wasn't the right fit. But I had been thinking about what the next move was. And I called my wife and said, hey, I got fired. And she said, well, check your email whenever you get home. So I did. And she had already started my operating agreement, or she already drafted my operating agreement and started my LLC. And so I knew I was going into real estate, but I wasn't sold 100%. And so I also started a sales consulting business. It was called Live Free Consulting. And I did what I knew best. I grabbed a list of the Inc.'s 5,000 fastest growing companies. I got through about 1,000 of them. I called 1,000 of them, and I landed 3 full-time consulting clients. And they said, well, Logan, what do you do? And I said, well, what do you need? And when I said that, I ended up flying around the country, going to their conferences, wearing their logos, pitching their products, building CRM systems, sales campaigns, and I hated it. The money was great. I needed the money. 6 months in, though, I was working as the head of acquisitions for a $50 million fund with my mentor's company, and I had this consulting business. I was doing both of them, and both at a pretty high level, I would say. And my wife and I took a walk in July that year, and she said, look, it's been pretty incredible what you've been able to build, but you need to focus. My wife's number one talent is strategic. If on Strength Finders, if you guys are familiar with that, and mine is not. Mine is competition, achiever, individualization, discipline, and focus. So I'm, really narrow vision, and I've had to become more strategic. But that was the moment that I said, I am winding down the consulting business, and I'm 100% in on real estate. And that's when I got involved with commercial and multifamily, putting my own projects together. I got a lot of experience working for that fund. We did over 225 doors for those guys, which was incredible. And those were all single family homes. So it was a lot of transactions. And what that taught me was how to build an investor list, how to talk the lingo, how to estimate rehabs, how to underwrite properties. And I was building my own investor list at that time. And so about October of that year, is when the fund stopped buying, and I moved my license to a commercial multifamily brokerage, and I started Live Free Investments on top of that, and really started to buy commercial property and raise capital. And that's kind of what leads me here where I'm at today.
All right, man. That's a great story. There's so much
Yeah,
there,
I know.
So
I try to keep it there's a lot to dive in there. I try to keep it as short and let you ask me some questions on what you want to dive into.
no, that's perfect. No, I like hearing it all. And
Okay.
the hardest part for me, I'm not super smart, so I always try to think back. Like, okay, let me remember all these things.
Sure.
But the first thing I want to dive into is, well, for one, you had mentioned when you bought your first house and you ended up selling it after 2 years, you made like your whole year salary in that,
Yeah.
you know. And I think a lot of real estate investors, when they get involved in their first couple properties, they see the same thing. And
Mm-hmm.
it's so funny. I've mentioned it before, but I have friends or whoever in my life that doesn't really believe in investment property, and they're like, "Oh,
Sure.
I don't want to answer the phone at whatever and do the toilet thing." Everybody always says that. And I'm thinking, okay, like literally, you could make 100 grand on this property in
Yep.
2 years. How many hours do you work? Most people work maybe 3-4 years to make 100 grand, or longer to save
Totally.
100 grand, like 10 years maybe.
Mm-hmm.
uh, it's like they're not willing to like do that and take that step with just one little thing. You can make 100 grand.
That's
You
right.
might have to answer a phone call and do a couple things, but it's not nearly what you do going to 9 to 5.
Yep.
So I like that you made that point. My first question though is, you said that you had found a new mentor in Kansas City.
That's right.
How did you find that mentor? Like
Yes.
how did that whole scenario work out?
Yeah, it's a great question. And my wife and I had this conversation last night. I always try to take we have one kid, you have three, Justin. It's always important. One of my clients, actually, he's about 20 years my senior, and he's got two small kids. And he said, hey, you need to make sure that you continue to date your wife. And so each week I take my wife out for a date, and we find a babysitter. And last night she said, just thinking about your background and where you came from, Logan, she's like, you've always been, involved with either other families or other good men that were trying to help you along the way. How did you do that? I said, well, I just poured into that relationship, and I just added value, and I just asked questions, and I just spent time with these people. And so I've been building relationships. It's one of my probably top strengths, I would say, for a very long time, and I didn't even realize that. And so when I got into the real estate business, it was just a natural progression for me to just start building relationships. And where I found it was very specific. It was bigger pockets. And 6 or 7 years ago, Justin, it didn't matter what you did in real estate, you made money.
Yeah.
And especially in Kansas City, like it was before everybody was buying in Kansas City. And so I wasn't smart. I had a good mentor who was helping me, but I could have bought anything, lived in it for 2 years, added some value to it, and then sold it and made money. But I did find that mentor on Bigger Pockets, and it's been a great resource for my business ever since.
Okay, so what was he exactly? Was he, you said he had a brokerage, right? Was he a
Mhm.
just
And property management company and construction as well.
okay, so you went over there, that's where you ended up getting your real estate license as a residential agent,
That's
and you
right.
started working this fund of his that he was doing like turnkey, or what kind of properties was he doing?
That's a great question. And so it was the hybrid turnkey model. So we coined this term. Everybody was really hot, like Memphis Invest and all these companies were really hot on buying properties, adding value, and selling them with a tenant in the building, right?
Hmm.
To investors. We thought about it in a different way. We would find the property, we would act as the broker on the deal, and then we would estimate the rehab for them. We would complete the rehab for them. We would place a tenant, but we never took ownership of the property. And so the investor was able to capture all of the equity throughout the process instead of just buying a property at retail value that had no equity left. And so it was kind of a hybrid turnkey model that we coined. And this is kind of a crazy coincidence, but he found that fund that he was representing on Bigger Pockets, and
Okay.
so they raised $50 million in cash. We would go buy the property cash. We would close in less than 7 days, no inspections, and that's how I was able to do the volume that I did. However, at the same time, I was on Bigger Pockets, just responding to everybody that was talking about Kansas City, building my own list and helping us grow our list as well at the company for people who wanted to do deals that maybe didn't fit the fund's criteria.
Mhm.
And so it was kind of an in-house kind of system that we had that we could help align our goals with their goals across the whole process for those investors.
Okay, yeah, that's cool. I think I interviewed, I hope I get her. This is the right lady, but her name is Whitney Hutton recently.
Okay,
And I'm not sure if her episode will come out yet by the time this comes out.
sure.
But she says the same thing in her area, which is they call it the Burr key.
Okay,
It's like
yeah,
it's like Burr plus turnkey kind of combined, so it
there you
leaves the
go.
equity on the table. So
It's the exact same model.
that's cool. But you guys are doing it years ago, so
Yeah.
that's awesome. Real quick, I just want one point about the finding the mentor thing. You said you found him on Bigger Pockets, and you're real good at like being personable and keeping in touch with that relationship. What was some key factors to you, making a friendship with this guy, or
Hmm.
this, I don't know if it was a guy, I assume,
Yeah.
you know, that made him able to mentor you, like what was some of those key factors? Just what was it?
I think it was two things. The first was being authentic, honest, and having integrity. And the second thing was being willing to work and put action in. But also, I knew the lingo. I knew how to speak it. I knew the numbers because I had been spending time educating myself. But I think the biggest part of it is I never asked for anything. It was always, hey, can I help you do this? Can I help do that? Here's a property, that I found that's not listed that I think is a good opportunity. So I was like Gary Vee would say, I was jab, 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 and then I right hooked when the time was right. And so I gave, 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 and then it was actually I didn't have to take ever. It was offered to me after I added enough value.
Yeah, no, that totally makes sense. Yeah, it's like just being there all the time, like adding value. And if you don't know how to add value, like think of something to do. That's part of the reason like I have this podcast is
That's right.
because, you know, one of the reasons I got that my business partner up in Idaho, he's far above me in business, like in his
Sure.
real estate, maybe not in investing, but in his real estate sales company. And, one of the things I think I bring to the table is the podcast and meeting people. And I didn't really know ahead of time what the podcast was going to do,
Sure.
but you got to look for other ways out there, which is what you're talking about, like bring value, like always be asking what you could do for them. And then, if you're personable and you are nice to talk to and you're hardworking, then I guess it's most likely you're just going to end up working out. So that's a good point. So did you end up buying more of your own rental properties through this time while you were working there or other places?
Yeah, I did. But I never bought a single family home again.
Yeah.
I saw the detail. I saw the work that it took, and I had always had my sights set on commercial and multifamily. And so I actually bought some commercial properties while I was going through this process, and I started to broker and represent buyers on multifamily properties while I was there on the tail end as well. What I found was that when you're working with a property management company and a brokerage, typically they have a specialty and they have a niche. If somebody says, "Hey, I'm a jack of all trades," then they're probably a master of none. And so, my broker was not well versed in the multifamily and the commercial space, and so I knew that's where I wanted to be long term. So I started doing that when I was there. I brought it to him and I said, "Hey, this is what I would like to do." And he's like, "Well, that's not really our model, and that's not really where we're focused." And so I went and made a decision, and I had to leave that partnership and that opportunity that I had with him behind. And that's when I went and found my next kind of, what I'll say, collaboration.
Okay, cool. So then from there you went on and you got your commercial broker's license.
And it's the same thing here in Missouri. There's
Oh,
no
it is.
difference.
Oh, okay. I know some places I think they're different oftentimes.
Yeah.
Okay, so you went over and you found a commercial broker and you started working for them. Now, talk about what year was that exactly? Like maybe 2-3 years ago?
Yeah. It was 2.5 years ago.
2.5 years ago. All right. So how was that challenge different going into the commercial space and working with you know the bigger complexes as opposed to the residential side? There's obviously like different mindsets and everything that
Yeah.
go along with it, right?
Well, I think the biggest struggle I had was taking my residential investors and trying to talk to them about commercial property. It was the wrong move, and so I had to start back from scratch. And I found new investors that never had even thought about single family homes. And so that's a big point to know, that if you are working with single family investors, don't try to sell them commercial property. They want to do single family homes, and there's nothing wrong with that. And or duplexes or fourplexes. There's nothing wrong with that. I am not of the notion that Grant Cardone says you got to start with 30 doors. I do not believe that. I think you should start where you're comfortable, especially if you're moving into a brand new market, right? Like, that is a huge step. If you're not there and you can't go see the property, you don't know the neighborhood, you don't know your property management team and the operations team that you have, you should start with what you're comfortable with. And so the biggest challenge I think I had was mostly just on the education side. And so I had to change my underwriting from doing 4 units or below into, okay, well, now you actually have a real estate business. You're working with a third-party property management company. There's CapEx reserves, there's turnovers, there's all of this different things that you have to factor into your underwriting. And so I knew I wasn't well versed in that. And so I hired a coach, and my coach was Michael Blanc. And I've been on Michael's podcast, and he was instrumental in helping me understand how to look at a multifamily property. And so then I just started to reach out to every brokerage firm here in Kansas City and try to start underwriting their properties. And so I just got a lot of reps under my belt on the underwriting piece, touring those types of properties, being able to look at different deals and say, well, it looks like this has got some deferred, maintenance that hasn't been touched, even though they say that, it's been updated. Yeah, probably not. And so I got a really good feel for that as well. In the transition, happened pretty seamless for me, only because I put myself in the opportunity to work with an expert in that field. And so my broker now, who is Audrey Navarro at Clemens Real Estate, I moved my license there for a very specific reason. They're owners and they're investors, but they also have a full service brokerage and property management company and construction under one roof. And they own, about 1,000 doors now. And so I knew that I could learn from them, I could invest alongside them, and I could bounce ideas off of them. And since then, my thinking has just been expanded. And somebody asked me the other day on like, "Hey, Logan, I'm thinking about doing a single family home in Kansas City. What's financing look like on that?" And I said, "I have no idea. Like I have not been in that realm for so long that I couldn't even tell them what the LTV would be on a single family home.
Yeah.
Because once I made the switch, it was okay, really commercial real estate, you have to understand the finance piece of it. It is so much different than single family homes. There's amortization, there's interest rate locks that are certain 5-7 years sometimes. There's agency debt, there's mortgage brokers, there is debt service coverage ratios, there's reserves, there's all these different things that go into it. And that's why so many guys like Neil Bawa and these software engineers are having success in real estate, because they understand financing, they understand numbers, and what they typically need is a people person, a relationship person to work with. And so the biggest difference was just really understanding all of that. How is an appraiser going to look at this property? What, you no longer look at the comps in the area per se. You still do, but you mostly look at, okay, what is the income on the property? What is the cap rate in that specific area? What are appraisers going to look at from an expense ratio? All of these different things. And so going through all the acquisitions that I did with the single family home firm and moving to the multifamily brokerage, each lesson or each transaction I did, I just learned even more. And I'm very hands-on. So I don't just find a property and like send it to an investor. It is, before I send it to them, I have probably walked it. I've probably seen it. I've definitely underwrote it. And I've talked to a lender about what the financing can be. And so I'm thinking 6 steps ahead of what my investor is thinking about. And I solve all these big question marks for them, the problems, right? Hey, I don't want to answer toilets. Well, you don't have to, or I don't have to answer calls on toilets. You don't have to, trust me. And one of my mentors now said, look, any property that you buy, you should make sure that you can step away from the management of that property. And so every property that I have bought, I have never actively managed. And that's the best thing that I have ever done in the real estate world, was find assets that allow the income to pay a really professional person to manage that on a day-to-day basis.
Yeah, for sure. Because just like you said earlier, you mentioned it several times, being focused and like keeping like in your track, in your lane. And if you're out there trying to like buy investment properties and work on your business and make some money and trying to manage your properties at the same time, well, are you really, some people do it and they do it great. But for me, I think I'm not going to be able to do that the best I can do. So I might as well farm it out to a property manager that can, manage the property, and that's their lane. That's what they stay focused in. So
That's right.
that makes a ton of sense. Now you mentioned or at least I read here, that you kind of specialize in working with buyers directly, more so than like trying to work with sellers. Why did you decide to do that? And then we'll dive into, how can somebody find that's trying to break into the commercial space? How do they get an agent to help them?
Sure.
Because you got your list of buyers there, you got your list of people that have bought a bunch of properties, and so I'm sure it's hard to like bring somebody new into the table that you don't know if they have experience. So let's first, why buyers? Second, how to find an agent.
So when I started this, a couple years ago, that was what my experience was with, thinking about it from a buyer's perspective. And so really I positioned myself as an extension of that buyer, right? And so, I looked at the commercial real estate sector in Kansas City. I realized that there's a lot of brokerage firms. There's a lot of agents calling on properties to get listings. Great. That's fine. But you know what there is a big need for was people that needed representation in the marketplace, and especially if they do not live here in Kansas City. And so I created a value proposition of, hey, I can help with the financing, I can help with the construction, the property management, and anything that you need to set up, I can help. And so I took that same hybrid turnkey model from single family homes, and I applied it to commercial property, especially with people that have never bought a property before. And so I thought there was a big need there. And I sat down with my broker and I gave her my business plan on what I was going to do. And she said, "You're crazy. We don't do that here. That's not a good model." And less than 12 months later, she was sitting down with me and saying, "Hey, here's Rod Santomassimo's book, Brokers Who Dominate. And thank you for your work past year. You were the #1 producer in our whole company." And she said, I knew that you were different, but I didn't really believe in the model that you had. And now that you have proven it out, I think you've actually got something. And so I worked with buyers because I know how they're looking at properties. Secondly, I knew there was a need for it. And thirdly, I think that there was an opportunity in the marketplace to help people get started, and that's kind of the role that I took. Now, coincidentally, that has turned into quite a bit of listings for me, because now people see, okay, Logan's putting a property out. I'll give you an example. I got a listing on a 40-unit apartment complex out in Independence, Missouri, and less than 7 days, we had 6 offers. For basically asking price that we have on the deal. So, I have built so many good buyers, such a good positioning and brand in Kansas City that, hey, I'm the out-of-state Kansas City guy, that now owners are calling me saying, hey, would you come take a look at my property? I saw that you sold this, this, and this, and I think that you are the right person to take this to market. And so now I'm doing listings as well. And I'm able to send it out to my buyers list, and a lot of times it doesn't even hit the market before we actually go under contract with somebody. So that's kind of why I started in the buyers role, I guess, and working with buyers instead of sellers.
Yeah, no, for sure. And I think most people have to start with the buyer's role. You know what I mean? But what you did, I think, is a little different, is that you really focused on that and tried to like grow that side of it as much as you could before just instantly trying to move to sellers. Like
That's
most
right.
people in the real estate industry, they're just all about, well, as soon as you can get to selling all the properties, the better. So, which, maybe in the long run is good, but then you don't have the buyers list and the whatever I'm trying to say, the you're not the go-to guy for the buyers. You know what I mean?
That's
So
right.
that makes sense. Well, what about, how does somebody come into a new market? Because I know I've experienced this talking to commercial brokers and, trying to get them to take you seriously. Like how does that work to move into the commercial space?
Yeah. Well, it's not a one size fits all answer. And I've been asked this question a lot. I think there's a few things that you can do. The first is, if you don't have a track record, you've never done a deal before, it's going to be tough no matter what. I'm just going to put it right out there. Like,
Yeah.
that's not going to be easy. Now, with that being said, if you are represented from a buyer's perspective with an agent here, or in the market that you're interested in that has a good track record, you can rely on their experience and their track record to actually take it to sellers and sellers brokers and say, hey, we close transactions. Now, that might be difficult to find a guy like me in every single market that's willing to do that. But what you can do is you can partner with somebody. It sounds like you have a business partner in Idaho, right? Like I had, before I started making properties or offers on properties, I made sure that I was paired up with somebody who had the experience. So you can put a kind of a team together that has more experience, or at least call an advisor that says, hey, if I bring you a deal and it still works, can we do this deal together? And can I use your name as a track record, and I'll go hunt deals down? That's the first way. The second way, I think, is when you get on all the lists, go get on their mailing lists. And when the deal comes out, send them an underwriting of what you are, look at how you're looking at the property. So, one guy that does this really well, his name's Mason Fiascone. And, when we were looking at working together as a buyer representation kind of situation, he would get properties that I would send him. He would put it through his analyst, and he would make a 30-second to a minute video walking through the assumptions he made and why it would or would not work. And if it didn't work, at what price it would. He took the time, the effort to underwrite the property. He was timely in his response, and I took him very, very seriously. Mason and I are good friends now, and he's having a lot of success doing this. So that's one way that you can tell people, or you can show people how you are serious about doing it, is underwriting the deals, giving them feedback on why it does or does not work. Additionally, you can have a lender partner who has already looked at your balance sheet, has looked at what you have been able to do, and you can get a letter of recommendation from a solid lender that says, hey, this person has the opportunity and it has the capacity to actually perform on this deal. That's another way that you can do it. And I think the last way that you can is just try to stay in front of people. And that's the only way to do that is communicating in a clear, concise, and compelling way what you are trying to accomplish. So here's my criteria. Here's what I'm looking to get out of this situation. And this is what I'm going after. And, if you do that and you ask those brokers, is this realistic for your market? And they say yes, then you have a hit. If they say no, go to a different market. because I have calls every week that say, Logan, I'd like a 100+ unit multifamily deal, 1970s plus circa, on the years built, value add, garden style, in a great school district. You know what I say to them, Justin?
Not going to happen in, yeah.
Bye-bye. Go somewhere else. I don't have that. I have old properties. I have properties that are in up-and-coming areas, and I don't have what you're looking for at a 7.5% cap rate. Kansas City is not there. So I weed that stuff out really quick. And so if you're trying to fit a square or a square peg into a round hole from the get-go, you're not going to have success. And that's the quickest way to burn a relationship, is if you're trying to do something that the market will not allow for. So have that conversation with these brokers up front. What is the market giving you? What do you currently have? Does that fit the criteria? And if it doesn't, then move on, because it's just going to be an uphill battle.
Yeah, for sure. And I guess like what you mentioned several times is the knowing the lingo, like it starts with like educating yourself and knowing what to talk about. Because if you call a commercial broker and you haven't ever analyzed any commercial deals or bigger
That's
than
right.
4 unit, you don't really know what to talk about the cap rate or debt service coverage ratio or the lending terms and whatever it's going to be. If you don't know all that, they're not going to take it seriously also.
That's right.
Along with building rapport and being personable and like responding to emails and calls promptly, right? I mean, within a good amount of time, let them know that they're not just wasting their time sending that stuff to you. I'm sure this is all coming from just my thoughts because I haven't actually closed on a big deal myself, but you know, that's what I'm assuming is what you got to do. So that makes a ton of sense. Well, so tell me a little bit about the Kansas City market. I know you're around that whole area, like, you know, just 2 or 3, 4 years ago, I mean, it was cap rates are way higher. There was a lot of cash flow going on there. It was like the hot up and coming market. Then everybody found out about it. And now what does it look like now? Like what are cap rates? What type of properties are available? That type of thing.
Yeah. Well, from an acquisition standpoint, my firm is really focused on asset classes that other people are overlooking. And so that is kind of the neighborhood retail shopping centers now. And so multifamily is extremely hot. So that's one thing that we have been less keen on. Now, I have a strategic advantage being in Kansas City, finding properties because of our property management company and being a broker. So I do get some opportunities that still make sense. However, I'm going in and buying properties in neighborhoods that are that an outsider would look at from a data analytical standpoint and say, no way, no, I'm not doing that. And that's risky. There's high crime, but I know what's happening in the neighborhoods. And so I can get my head wrapped around that comfortably, and we manage property in the area already. And so that's kind of one strategic advantage that I have from a multifamily standpoint. But I would say that the commercial triple net lease stuff in Kansas City is a golden egg opportunity still. National credit tenants, no tenant having more than 20% of the retail center, multi-tenant kind of neighborhood shopping centers that are e-commerce resistant, service-based tenants, right? And that's kind of what we're really focusing on from an acquisition standpoint, as well as multifamily properties that have a heavy lift in neighborhoods that people might not go to. So from a cap rate standpoint, I'll give you an example. We just listed and are under contract on a 72 unit property in the historic Northeast, which many people would say is not a area that, you know, is gentrified. It's not a suburban market. It's urban core to it, and it's very low income. And that property is trading at a 5.6 capitalization rate stabilized. But right down the street, I have a 41 unit apartment complex that's under contract north of an 8.5% cap rate because there's a heavy lift. It needs to completely cleaned up. We have an $800,000 rehab budget, and we're able to go in there and comfortably do that. From the triple net lease stuff, there is really great 30,000 square foot neighborhood retail shopping centers that are still north of an 8% cap rate. And so that's kind of the model. I closed on 52 units yesterday. That was a 7.5% cap rate as is, with opportunity to raise the rents and do some cosmetic upgrades. Those don't come around very often, maybe one every 3 months. And, I would love to find more of those, but it's difficult. And that's an off-market deal that came through a relationship that I used. I didn't buy that property. I wanted to use it as an opportunity to build a relationship with a new buyer group that I'm working with. And so You can still find 6.5% cap rates here in Kansas City on multifamily. But typically it's not going to be something that is listed, or if it is, there's a big heavy lift on it right now.
Yeah, for sure. No, it all makes a ton of sense. So as we're talking, as we're having this interview, this is what is the date today? Today is like March 12th. So if anybody's paying attention to the whole market and the
That's
coronavirus
right.
thing, I mean, stuff is crashing. I mean, it is like
Mhm.
it is a huge downfall in the stock market, which I can only imagine is going to take its it's going to move throughout the whole economy. What do you guys have any plans or thoughts on how you guys are going to position yourselves over the next couple, it could be several years of a different change, a change in the economy, because we've been used to this high rolling, everybody
Yep.
makes money, it's amazing for so long. Well, something's bound to change. So what are your thoughts on that?
I've been waiting for this,
I know.
Justin. I've
Yeah.
been waiting for this. I see this as blood in the streets. It's going to get worse before it's going to get better. The real players and hitters are going to go buy, and they're going to go buy because interest rates are at 3.5%, and they know how to look at real estate from a long-term perspective. Russ Gray put it best: "This too shall pass." And with that being said, if you're trying to make a move into a new market, you've never done something before, do not overpay. Do not be speculative. Don't do that. Do not think that you can raise rents $200 a unit for absolutely no reason, just because CoStar tells you that you can. Don't
Yeah.
do that. But the underlying base value of real estate is not going to change per se. And if you still buy right, you still finance right, you still manage right, commercial real estate will prevail. Now, with that being said, the coronavirus, whatever your opinion is on it, you look at the last 5 election years. Each year there has been some kind of outbreak. Okay. There was SARS, there was Zika, there was all of these different things that happened during election years. I'm not saying that that's what's happening. I'm not downplaying the fact that coronavirus is killing people. Like, I'm not. But the flu kills people too. Now, with that being said, it's still going to impact the economy. And so I follow ITR economics very closely. And these guys are way smarter than me on how to look at the economy, the financial system, the economy, and how everything is kind of taking into consideration all these different factors that are playing in. And so I work with pretty sophisticated investors that know that they're just going to ride this out and take what the market is giving them. So if there's really low interest rates, maybe it's time to go look at a refinance. Maybe it's time to get that bank loan off and go get your agency debt for 30 years and lock it in for 10 at 3.5%. Maybe it's time to try to do that. But from the standpoint that people are going to stop renting apartments or stop going to retail stores that they need to get their hair cut, get their the veterinary clinic, the dentist, I don't see that happening. The biggest kind of question mark in my head right now is, how are investors that are heavily involved with stocks going to think about commercial real estate now? I had a call earlier this morning that was very interesting. He's an equities trader, smart guy. And he said, "Logan, you should probably use this as an opportunity to go retrade some of the deals that you have under contract." And I said, "I don't agree with that. I don't agree with that." He said, "Well, REITs have dropped 20 to 40% in the last 7 days." I'm like, "That's fine. That's a stock price. That's not the underlying value of the commercial real estate." And so we're not looking at it from a 3-month perspective. We're looking at this from a 30-year perspective. Owning real estate is still a safe play if you buy right, manage right, and you finance the properties right. And so we are headstrong. We are still moving forward. We're still raising capital. We're still buying properties. And I would encourage people to do the same. Just know that you should not be very speculative on any of the assumptions that you're making on the deals that you're trying to do.
Yeah, definitely. And cash flow is the main um, driver, I think, underlying thing that you should be looking for in the properties. I mean, obviously there's appreciation and value add and all that stuff, but if in these exact situations, if all of a sudden you go in speculative, like you're saying, and all of a sudden like something happens and your rent drops 12% or something, and then all of a sudden you can't pay the mortgage, and then that's where people get in trouble. So yeah, stay in there, and it's a long-term game for sure. So
Neil Bawa put it the best way. He said, "There's not a real estate bubble. There is a real estate syndication bubble."
Yeah,
And
that's for sure, right?
100%. If you are a capital raiser out there that you've never physically been to one of the deals that you've closed on, you've never managed a property, you've never been through the hard times. All of my partners were doing real estate in 2006. Okay, 2008 and 9 was pretty bad. I would say for the economy. Guess what they did at that time?
Bought it.
They not only bought properties, they bought community banks' books of business, and they are thriving right now. And I'm not saying we're going to get to that point, but what I'm trying to say is if you're out there raising capital because you're in a money state and you're around a lot of influential, high net worth individuals, caution. I'm cautioning you. Do not go just do every deal in Dallas Fort Worth that looks good and it's going to appreciate 30% every single year. I don't think that's a good play. If you are a strategic operator, you've done real estate for a long time, I think that you're going to be just fine. And those people are going to continue to do deals. These guys that are just raising capital, putting these syndication deals together, I would caution investors to just be very careful on the moves that they make in the next 30 to 90 days.
Yeah, and look, if you are going to invest with somebody, like do a passive investment or something, you really need to look at what they're, how they're underwriting the deals for the future, as far as like putting in these assumptions of the economy dropping, rents dropping, and all that stuff. Because some people that I've seen, they don't really build that in as like a buffer zone. You know what I mean?
That's
They're
right.
building in positive buffers instead of negative buffers. So that's one thing to look at. So lots of good information. Now I want to know, Logan, where are you headed? Like, what's your outlook look for you personally? Not just your company that you're working for, your investment thing, but what are you looking to do over the next 5-10 years?
Yeah, there's this like conversation around the chicken and the egg with like real estate, and it's always about, do you need to find the deal first or the money first? And I've come to the realization that I have no problem finding deals. And so for me, this year is a big push on continuing to build my relationship-based business with accredited investors that want to invest in real estate but don't have the time to do that. And so for me, this year is building systems and processes. And I hate those two terms because everybody uses them. And it's like, well, what does that actually mean? Okay, well, I'll tell you. I have a full team that does my marketing, my ghostwriting, manages Bigger Pockets for me, my social website, and all of my posts. Okay, so that's a big push for me to get that off of my plate. Secondly, getting a CRM system up with all of our investors in them, setting up email marketing campaigns, setting up funnels on the website that allow them to get to know me before we have our first call. That way, whenever we have that first call, they know my philosophy. They know my experience, my track record. I don't take 30 minutes going through that with them. Then we can get to the point of, what are your goals? What are you trying to accomplish? And then I'm hiring a full sales investor relations team to handle a lot of the inbound leads that I'm getting, but also making outbound calls to our investor base. And so for me, it is continuing to develop relationships with property owners here in Kansas City, with state-of-the-art software that can help my business grow, and then building relationships with operators here that I can help either grow their business from a capital standpoint, or they can add something to my business to help it grow. And so that really looks like, okay, maybe I need to start working with some developers on some larger projects. Maybe I need to make those relationships. And so for me, it's building out this, what I'm calling investor acquisition system that allows people to get to know me before they talk with me. And if we're a right fit, they feel like that question is already answered before we have our first call.
Cool. Right on. That sounds good. Do you have a personal like unit count that you want to get to in your own personal investing or anything like that?
I don't, Justin. I think for me, especially with retail triple net leases, that's not really a unit count per se. I have some big goals from a revenue standpoint. Live Free Investments will do 7 figures in revenue this year, which is super exciting. But then also I have new issues with taxes, right? And so I have to make strategic moves throughout the year. Maybe it's a land conservation deal. Maybe I have to buy an ancillary business such as something that services the turns that we're doing. And so I'm trying to figure out ways to also offset the active income that I'm getting and the passive income that we have from our properties, so I don't have to write those six-figure checks to the IRS every single year. So for me, it's really trying to figure out, okay, how do I keep more of the income that I'm making? And then how do I do well by doing well? So a huge goal for me is helping to end homelessness in Kansas City. It's my neighborhood. It's my city. My kids are going to grow up here. I'm a faith-based guy. I want to give back. And so I'm working with a nonprofit here very closely called Restart. And Restart's been around since 1981. We serve 450 homeless people every single day. And we have 170 beds that we house those folks in every single day. And so finding funding for this nonprofit, helping to set up social entrepreneurship businesses to allow them to get back on their feet, giving them the services that they need to reintegrate into regular life is an extreme passion and mission for me. And the way that, the way that I'm doing that is through working with companies like Restart. Sorry.
Yeah, no problem. No, that's
I promise I'm not crying when I'm talking about that, but I do get really passionate about it. Something just got in my throat. So
yeah. No, that sounds amazing. And I love the fact that, people, when they're in it, their heart's in it, you know what I mean? Then they're doing things like that to really help out other people. And it's having the end goal and a vision in mind of why you're working so hard and why you're trying to
that's right.
become so financially successful. It's not just so you can go buy that Bentley, which might be nice, and that might be cool, but you should have something else that you're trying to work for as well. So right on. Well, we had mentioned several times about learning the lingo and learning about real estate and learning new asset class. What's your favorite resource for learning about new aspects of real estate? Is it mentorship, podcasts, books? Like if you had to pick one to tell somebody, listen, this is what you guys start with, what would it be?
Well, I think it's a blend. And similarly, how I start with a new client of mine, I start with the end in mind. And I'm like, okay, what time do you have right now? What resources can you actually put into your current schedule that is sustainable? Everybody asks me always about what journal are you using? What productivity system are you using? And I always say the one that works best for you, right? And so if you can stick to it, that's what you need to do. There's books, there's programs, there is groups. All of this stuff works. What it depends on is the action and the effort that you give it. What I will say, the fastest way to get started is to find somebody who's already doing it, add value to them, and ride along with their success. At the right time, break off, do your own thing, or stay with them. But if you can find somebody that is willing to pour into you because you're pouring into them more, that will absolutely exponentially increase your ability to get things done in the real estate sector. But books, programs are all fantastic. But if you can find somebody local that you can go meet with on a regular basis, that will exponentially increase your success.
For sure. Okay. What about a favorite piece of technology or something like an app or software that you use, maybe personal or business? It just makes it all like flow easier, like just something that makes life a lot more productive.
Sure. Well, I think that for me, I would say planning my day. So like my morning routine is sacred. So I'm a 4 a.m. guy. I read Jocko Willink's book, Extreme Ownership. And, I write down a lot, discipline equals freedom. But the biggest productivity hack is not a software piece for me. It's tuning my heart and my mind and getting those in line with what I'm trying to accomplish. And I'll explain what that means. So I have a journal that I go through every day after I'm in my scripture and I've prayed and I've spent time doing that I get into the journal. It takes me about 35 or 40 minutes every single morning to think through what my day looks like, what my top 3 goals are, what are the tasks that need to be done, what meetings do I need to prepare for, and then I have a whole morning mindset portion of that. Okay, so like, what are you excited about today? What's going to be the biggest challenge and roadblock for you today? How are you going to overcome it? What are you doing why are you doing this? Legacy is my answer every single morning. Who is depending on you today? So all of those questions are asked to me. So when I get going at 8 or 8:30 or 9 for the business day, I have already completed and thought through tough scenarios, tough conversations, what my goals are, what my profit producing activities are, and then I can go attack that. And so I have extreme clarity every single morning on what I'm accomplishing, what I need to do to move my business forward. And thinking through that is by far the biggest productivity piece that I have implemented the last 2 or 3 years.
That's awesome. No, it makes a ton of sense. I think one thing too that I recognize is, with you being so successful in football, college, then going into the Raiders and all that stuff, is like that work ethic and drive. And you've totally taken that and being full force focused on this new avenue of life that you're focused in. The same with your morning routine, you know what I mean? Which just sets you up so good for the day and the experiences to come. So that's awesome. Well, where can more people find out about you, what you're doing, contact you, anything like that?
I'm on all the social medias, but I think LinkedIn is the best place to engage with me, Logan Freeman. My website's posted everywhere. It's livefreeinvestments.com. You can contact me there. I have tons of resources on there as well. But LinkedIn is definitely the one that I am personally most engaged on.
Right on. Cool. Well, Logan, thank you so much for this. There's tons of good information in there. And everybody listening, please go to Logan's website, livefreeinvestments.com. Reach out to him on LinkedIn. If you're looking for property in Kansas City or you want to get into a new asset class, reach out to his team and I'm sure they'll be able to help you. So, Logan, thanks again, man. I really appreciate it.
Thanks for having me on, Justin.
Yes, sir.